We're going to work through three problems that involve cash activity. This first problem here is asking us to predict cash collections for the month of March. So we can see that all of the company's sales are using accounts receivable. 35% of the sales get collected in the month that we make the sale, 45% in the subsequent month, and then the remainder gets collected in the second month after the sale. So we're looking for cash collections for March. So the place to start here would be, let's take March's sales revenue, which is 40,000, and we expect to collect, it says 35% in the month of March. So we'll be collecting that money during the month of March. 40,000 times 0.35 is $14,000. Now, what else are we going to be collecting in March? Well, we're going to be collecting some of February's sales in the month of March, and that's going to be 45% of February's sales. So if February had 60,000 of sales revenue, and if 45% of that revenue will be collected in the month after the sale, we can take 60,000 times 0.45, and we can predict that 27,000 will get collected in the month of March. Finally, some of January's sales will also be collected during the month of March. Take that extra zero off of there right there. And let's just take a look at this here. So 35 get collected in the month of sale, 45 in the second month. That adds up to 80%. That must mean that 20% gets collected in the second month after the sale. 50,000 times 0.2 is $10,000. So now just a little bit of simple addition here. 14,000 plus 27,000 plus 10,000. Our predicted cash collections for the month of March are $51,000. Now, another thing that we can do is we can predict what the accounts receivable balance will be at the end of a particular period. So here we have a company that is preparing their master budget for the next 4 months, and we've got budgeted unit sales right here and the selling price per unit. The collections are 40% in the month of the sale, 60% in the following month. So the question is asking us, what will be our accounts receivable balance at the end of February? Okay, so let's think it through. January sales, what's going to happen there is 60% of them will get collected in February, 40% will get collected in January. So all we really have to do is deal with February's sales. So for the month of February, we're predicting 7,500 units, so 7,500 things sold at a unit price of 121. That means our total sales revenue, 7,500 times 121, total sales revenue is predicted to be 907,500. If we think that we'll collect 40% of that in the month of February, that would be our cash collections for February. What that means is 60% of that will remain in accounts receivable at the end of the month. 907,500 times 0.6 is $544,500. So at the end of February, if we were preparing a budgeted balance sheet, we could predict that accounts receivable would be roughly $544,000. One final calculation involving cash activity here is cash disbursements. So we see that this company purchases items on credit, pays for 40% in the month of purchase, 60% in the following month. Cost of raw materials purchases is $256,550 for July and a little over $278,000 for August. So if we're trying to figure out the August cash disbursements, we're going to need some of July's purchases and some of August's purchases. So July purchases budgeted were $256,550, and we would expect to have paid 40% of those in July. we're going to expect to pay for 60% of those in August. So our cash disbursements, $256,550 times 0.6. Cash disbursements related to those purchases from July would be almost $154,000, just a little shy. Budgeted purchases for August are a little over $278,000. We would expect to pay for 40% of those during the month of August. So let's figure out what that product is times 0.4 here. $111,220. Combine those two amounts and we can see that the budgeted cash disbursements for August just a little bit over $265,000.